Just imagine sitting as an investor and being pitched to by many startups. Yes, you heard it right. Being an investor is one of the most aspirational job for every finance professional. The road to becoming an investor is a less traveled road, and this is the secret we are decoding today. Everybody wants to be pitched to. Everybody wants to be an investor. Before we get the secret, let's understand why it is such an aspirational job. Apart from the ego boost and recognition, it also comes with huge fat paychecks and killer commission, which can run into crores of rupees annually. So, how do you get there? Hello folks, welcome to Number Leader. I am Nitish Kashyap. I am your host for today. Today, we shall learn how to be at the top of the ladder measured in terms of money, fame and connections. That is being a shark. A shark means you are an investor. Either you can invest your own money or you could manage somebody else's money. So while you are investing on behalf of others, you are part of the buy side. Not BY, BUY, buy side. So what is buy side? Buy side essentially invests capital into companies by buying equity and bonds for a return to be shared with their investors. Getting into the buy side isn't really a cakewalk. There are two ways to it: money route and academic route. Money route is where you are super rich and you become an angel investor, which of course comes with its own share of risks. Alternatively, you could choose the academic route, where you could be a part of the front office of a buy-side firm purely through the academic route. I reiterate, the front office, not back office or mid office. Jobs here are of course demanding, and you might end up stretching for 80 to 100 hours a week, especially during deal negotiations. In this video, we are going to talk about the academic route primarily. Plus, we shall discuss about the various routes and career choices you could make to reach the top. Buy side comprises of hedge funds, private equity and venture capital firms. Hedge funds are fund of funds where they invest into securities, non-securities and derivatives. They are usually not as regulated as a mutual fund. Private equity invests their funds into established non-listed private companies for equity or bonds. Venture capital firms are the firms that are more sexy, they take more risky positions, they invest in startups. So all these three sectors pay killer commissions to their staff. The career path to getting into buy side is not so easy though. Along with educational qualification, you need relevant experience, you also need the right kind of connections. Educational qualifications preferred in India for buy-side front office staff are CAS, CFA and MBA from Tier 1 institutions. Experience needed to get there can range from any of these subsectors like investment banking, corporate banking, asset management, consulting, corporate work experience and quite a few others. Let us now classify all of these jobs into four broad categories. Finance jobs as an investment center, finance jobs as part of profit center, finance jobs as part of cost center, and finance jobs and careers as part of revenue center. Investment centers are businesses that invest capital, generate revenue, and incur expenses. Careers as part of investment center are mainly jobs in an investment bank. Investment banks are essentially the bridge between investors and companies. They're usually involved in deal-based business. So, your job would be into mergers and acquisition, IPO, debt financing or leveraged financing. Getting into these roles might be a short way to the front office of a buy-side job. CAS, CPAs, CMA, CFA and MBA from top 10-15 college freshers are usually considered for entry-level roles. Other jobs in investment center are corporate banking jobs which provide debt financing and liquidity to companies. Retail banking, which provide loans, accounts, debit and credit cards, also fit in here, but transitioning from a retail bank to a buy side might actually be quite difficult. Profit centers are businesses that do not have a huge outlay of capital expenditure yet generate revenue and incur expenses. Careers in profit center are jobs in big four accounting firms, consulting firms, investment management firms, credit rating agencies, BPOs, KPOs, audit firms, and a lot of other consulting firms that you see around you. Against the popular belief, I want to make a bold statement here. Accounting, audit, and taxation related jobs would not lead you to the buy side. It's reserved for exceptional folks, and probably 1 in a million out of the accounts, audit, taxation make this cut. But other jobs that eventually do lead to the buy side jobs are valuation, equity research, corporate advisory, asset management, merchant banking, portfolio management, management consulting, and credit rating. This is essentially because you do the same thing that would help you while you're on the buy side. So, with a couple of years of experience and with good connections, one can plan for a career move to the buy side gradually. Again, a CA, CMA, CS, or an MBA from a Tier 1 institute could get into any of these roles. Cost centers are businesses that do not have a huge outlay of capital expenditure or generate revenue, yet incur operational expenses. This can be internal departments in a business that only act as a support function. For example, the housekeeping team in an IT company. Careers in cost center could be classified into controllership and business finance. I'm talking about careers in cost center in the finance department could be classified into controllership and business finance. Controllership is about controlling the business through numbers, and it provides all the data for day-to-day functioning of the business. It has activities such as corporate accounting, accounts payable, accounts receivable, treasury, procurement, payroll, audit, tax, compliance, etc. So graduates in commerce and accounting find jobs here, along with CAs, CMAs, CS, and also advocates in few instances. Business finance function, on the other hand, provides the strategic direction for the business. It aids in planning and budgeting process, and also in the budgetary control and performance management. Number and data crunching for day-to-day management decision making is enabled by this team. So this team largely consists of CMAs and MBAs. So while controllership may not lead you to the buy side, business finance or FP&A team could definitely lead you to the buy side. Since your job involves talking to investors and providing them with data points on the business on a day-to-day basis. Revenue centers are businesses that do not have a huge outlay of capital expenditure or operational expenditure, and yet they end up generating revenues. Careers in revenue center could be jobs such as sales and trading, distribution of financial products ranging from savings and investment products to loans and insurance products. There are no major educational qualification criteria here, but experience and connections do matter. Many jobs here do not require a degree too, yet it is very, very lucrative. I personally know tons of people earning lakhs of rupees every single month. But will this lead to the buy side? It does. It may lead to the middle office or the back office function and may not lead to the front office. Is getting into the buy side your dream job? Let me know in the comments below about your dream job. Talking of dream jobs, you should actually check out this video on how to crack a dream job. Get industry ready with Number Leader, upskill and grow with us. Like, share, comment and subscribe to encourage us. We promise to create content that will fast track your career in the world of finance and management.